Hi everybody, tax tip for today. Capital gains tax when you sell residential property which is not your main residence. Capital gains tax is payable when you sell residential property within 60 days of the date of completion. We are still finding often that people are not telling their accountants until it comes to completing their tax return, which obviously causes a lot of issues with penalties and interest. So I would advise that you advise your accountant as soon as you come to the decision to sell the property, ideally before you actually sell it, so they can tell you what papers etc. they will need, which will be the completion statement, details of how much it cost, any capital expenditure you may have incurred over the period you held the property. Also, they will be able to help you with tax planning so that you can minimise the tax liability. Capital gains tax is a complex area, so it's important that you deal with this correctly to avoid penalties and interest. It is possible to avoid the filing of the capital gains tax return and the payment of the tax within the 60-day period if you can, if you're close enough to the end of the tax year, so you can just file your ordinary tax return. You will need to set up a special capital gains tax account with HMRC for this. This is something you will need to do yourself, because you'll need a government gateway, etc. Although obviously you can get assistance from your accountant, assistance or advice from your accountant on that. I think I've covered everything with that. Okay, thanks for listening.